Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. Currency trading in the Philippines is cancelled again following the suspension of government work in Luzon due to severe tropical storm Christine. Finance Secretary Ralph Recto calls for reforms at the International Monetary Fund and the World Bank Group to better support developing nations. Manny Pangalinan's Metro Pacific Investment Corporation and Keppel Infrastructure Trust sell their stake in the country's largest imported oil storage facility to a U.S.-based investment manager. And Philippine Airlines, owned by billionaire Lucio Tan, becomes the first Southeast Asian airline to secure a spot in the new flagship Terminal 1 at JFK International Airport. First, the financial markets. Wall Street closed lower as rising Treasury yields put pressure on mega-cap stocks. Investors were also less confident about strong rate cuts from the U.S. Federal Reserve. Nvidia, Apple, Meta platforms, and Amazon fell, dragging down the tech-heavy Nasdaq lower by 1.6%.
The market today does seem a little bit weakness-driven, somewhat by some concerns about the consumer that had been expected to be a little more resilient after the Fed rate cuts, that maybe there's some disappointment. So you're seeing some of the quick service restaurants, the McDonald's, Starbucks commentary, and some others, cast a little bit of doubt on consumer strength. So we see some of those names leading the market down. In addition, obviously, the E. coli issue with McDonald's is putting a cloud on that as well. So in general, while earnings have been okay, today's been a little bit of a disappointment versus what we've been seeing in the past week or two.
Over in Europe, shares also fell, with investors eyeing U.S. Treasury yields and corporate earnings. The FTSE 100 dropped 0.6%, the DAX slipped 0.2%, and the CAC 40 lost 0.5%. Here in Asia today, markets open lower in step with Wall Street's declines overnight. The Nikkei 225 is down by 0.7%, South Korea's Kospi down by 0.5%, and over in Australia, the S&P ASX index is flat. Over in the commodities market, oil prices continue to climb due to ongoing tensions in the Middle East and the upcoming OPEC decision on December output. On the other hand, gold is up 0.2% to 2,720. Finance Secretary Ralph Recto is pushing for reforms at the International Monetary Fund and the World Bank to better support developing nations. Recto, who currently chairs the G24 Board of Governors, called for a more flexible and effective IMF and World Bank during a high-level meeting at the IMF headquarters in Washington, D.C. One of his key proposals is the creation of a new liquidity provision, which would offer crucial financial support to countries with strong economic fundamentals during times of crisis, helping them to manage economic challenges without compromising long-term growth. The G24, established in 1971, represents the voice of developing nations in global financial discussions. These reforms are important because they could make it easier for countries like the Philippines to access resources, promote sustainability, and drive economic growth. President Bongbong Marcos emphasizes the importance of two government initiatives designed to speed up permits and licenses for strategic investments in a move expected to benefit the business community. In his remarks for the 50th Philippine Business Conference and Expo in Pasay City, Marcos highlighted the ELGU platform launched in 2023, a digital platform that streamlines access to local government services like business permits and barangay clearances, making it easier for companies to operate. He also mentioned the Green Lanes initiative, which has quickened the approval process for 162 projects worth 4.4 trillion pesos. These changes matter to the business community because they reduce red tape, attract investors, and support economic growth. This as Marcos recognizes the challenges and promises practical solutions to keep the Philippines attractive for investment. The Philippine Economic Zone Authority, or PEZA, reports an increase in approved projects this year. That number rose to 198 in the first 10 months of 2024, up from 169 in the same period last year. These projections are valued at more than 124 billion pesos. In October alone, the PEZA board approved 19 projects worth nearly 8 billion pesos. This growth comes despite a 6% drop in investment commitments, which fell to 135 billion pesos compared to last year. The new projects are expected to significantly boost Philippine exports by over $3 billion a year and create more than 40,000 jobs. A stronger export sector and increased jobs mean more economic stability and opportunities for Filipinos, helping to drive long-term growth. The Bangko Sentral ng Pilipinas is working closely with the Philippine Deposit Insurance Corporation to strengthen the country's financial stability. The central bank will share 4 important reports with the deposit insurer to help spot potential risks earlier. These reports cover bank financial performance, capital adequacy, liquidity, and recovery plans. The early detection of risks can help prevent financial issues from escalating, ensuring that banks remain stable and reliable for the public. Both agencies promise to follow strict data privacy rules, safeguarding sensitive information while they work together. Now, currency trading in the Philippines is canceled for a second day due to the suspension of government work in Luzon following severe tropical storm Christine. The Bangko Sentral ng Pilipinas announces that its monetary operations will also remain closed. Several flights have also been canceled due to the adverse weather conditions as Christine continues to bring heavy rains and flooding, with the Bicol region being hit the hardest. National disaster officials are in the process of confirming at least 7 deaths attributed to this storm. Suspended currency trading and closed monetary operations create uncertainty in the marketplace. Businesses relying on timely transactions and import-export activities are likely to face some delays. The interruption in air travel is also seen to affect supply chains and logistics. The Science and Technology Department is urging businesses to embrace artificial intelligence to foster the development of smart cities. But as Sujin Kim reports, the country's biggest business group has some reservations about this.
Around 50% of global activities are expected to be automated in the next 20 years. This as generative AI continues to reshape the business landscape, narrowing productivity and output gaps between industry players.
I think we believe that an initial focus on cost-effective, off-the-shelf Gen AI tools, which are now becoming more prevalent, would be the best way for SMEs to access the power of these new technologies.
We must build a robust ecosystem that accelerates the adoption, utilization, and commercialization of science and technology innovations. This ecosystem will empower small and medium-sized enterprises and industries to integrate cutting-edge technologies, turning them into practical, scalable business solutions.
The impact spans multiple sectors, particularly in marketing, sales, and human resources. As generative AI adoption grows, businesses, big or small, are urged to embrace it strategically for maximum impact.
We aim to integrate technology, innovation, artificial intelligence, and sustainable practices into urban and rural development. Through this initiative, we are building smart cities and resilient communities equipped with advanced infrastructure and technologies that enhance the quality of life while addressing climate change and environmental challenges.
According to data from McKinsey, less than 15% of leads require human interaction. That's why he adds incorporating a Gen AI chatbot to provide quick responses to inquiries is a net positive decision. While this is a good step for businesses, PCCI Executive Vice President Perry Ferrer cautions.
To be an innovative country, we need to start in education.
Education Secretary Sonny Angara says studies are currently being done to plan the integration of AI into the school curricula.
The President understands very well the gaps that we need to bridge. He has told us in the education sector na kailangan we must get our acts together and act in a concerted manner to produce quality outcomes for our young people. Our human capital development is on the right path under our President.
Our goal for the artificial intelligence is AI for all. So it should not be exclusive, it should be inclusive. So we can work with the industries at the SME level or the large industry.
Meanwhile, DepEd is working to address the resource gaps. Currently, a total of 165,000 classrooms and 2.1 million laptops are needed by both teachers and students. Sujin Kim, BNC.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, we're seeing weakness in the market. It's extending its losses after losing 0.6% yesterday. The PSE index is down by 0.4% to 73.38. The All Shares index is flat with a downward bias, down by less than 0.1% to 40.50 right now. Overall, if you take a look at the broader metrics, though, the market is up by 1.3% for the month of October and up by 14% year to date. Now, taking a look back at the sub-indices of the market, we're seeing a sea of red right now. The financials, industrial, holding firms, services, and mining and oil counters are all trading to the downside. Now, to help us make sense of these numbers, we're joined by Zerge Zandueta, a portfolio manager at COL Investment Management. Good morning, Zerge, and thank you for joining us.
Yeah, good morning, Maiki, and thank you for having me this morning.
Okay, Zerge, we're seeing losses. While we are seeing losses, the downside has been limited. It seems we're seeing some underlying support in the market. What do you make of this situation?
Yeah, I think markets are rallying in general because of the dovish pivot that the U.S. Fed and even the BSP have taken over the past several weeks. Normally, if you look at which indicators the market correlates most strongly to, normally it's the one that's liquidity driven. So when central banks cut rates, normally see equity markets rise. Now, in the case of the Philippines, it's holding quite a bit more strongly over the course of the past several weeks and days because of foreign buying. So what we've noticed is that a lot of foreign interest has started to come back in to the local market to the tune of, like, say, over 40 billion since the beginning of the third quarter. So it's really this net foreign buying that's been underpinning the support for the local market recently.
Mm-hmm. And that said, even though we're down by 0.4% now to 73.38, if you take a look at the bigger picture, the market, we are on course for our best finish since 2017. Now, this is going to be the first positive year for the PSE index in 5 years. So the base isn't that high. We're trading right now at a PE ratio of 13.3%. Zerge, can you tell us about what you make of this situation?
Yeah, I think this year is a refreshing year for a lot of Philippine investors, especially given how difficult the past 5 years have been. Consistently we've been seeing negative performance out of the PSEI. I think it's surprising so much so that when the market has been going up, I wouldn't be surprised if there were a lot of local investors that have actually been selling into the rally, thinking that, okay, now my funds have recovered, maybe I would want to step out at this point. But what is interesting, though, is the ones that have been buying the shares that locals are selling have been foreign investors. And we're seeing foreign investors come back in for the first time really since 2018 over the past quarter. So I guess what I would just encourage everyone is perhaps after this consolidation period that we're seeing, so the market went practically from 6,000 to 7,500 within the course of maybe 2 months. So that move was pretty fast. So normally when you see the markets move that fast, you need a period of consolidation just to digest those gains. I think that's what we're seeing now. After you see this consolidation period end, I would think that market participants could expect more bullishness for the market towards the end of the year and maybe even next year. So seasonally speaking, fourth quarter also tends to be the strongest in the year. That normally continues until January. And then again for next year, especially given the prospect of continued Fed cuts, BSP rate cuts, I think it shapes up for positive equity markets.
Are you of the belief that the BSP is going to be cutting interest rates in December by another 0.25 percentage points, and perhaps earlier than that, the Fed in November? What do you think they're going to do as well?
Yep. Right now, I think the Fed is on track still to cut 25 basis points in November and another 25 in December. In fact, that's what the future markets show. So 90% probability of a November cut, about a 70% probability of another December cut after the November cut. So if they do that, I think that will enable also the BSP to cut in December. I think the BSP will probably hold back on a December rate cut if the Fed actually does not cut in November, which could be a possibility. I think what's different today is that the Fed has tended to be more data dependent rather than forward-looking. So they tend to be reactive based on what the recent data economic numbers show. So because of that, I think it also has provided more volatility in terms of market expectations, in terms of what we're going to do. So I think you need to play this one closely by ear. If economic data in the US continues to come out strong, if for some reason inflation surprises to the upside, the Fed rate cut in November may be off the table. And if that's the case, the BSP might also pull back on doing their own rate cut, because as what we've been seeing now, the peso has actually been weakening or depreciating quite rapidly over the past 2 to 3 weeks.
Yeah, speaking of the peso, 3 to 4 weeks ago, we were at 55 to the greenback, and how things have changed. Currency trading has been closed for the past 2 days, but last Tuesday, the peso closed at 57.88 to the greenback. Ouch. Okay,
Yeah,
what are your
yeah.
thoughts on the currency? Where do you think it's headed? Assuming what happens with the Fed and the BSP's response to it, where do you think that'll take us through to the end of 2024?
I think in terms of the peso, the good thing about it is it's not weak because Philippine fundamentals are weak. I think it's weakening right now out of reaction to dollar strength. And what happened when the Fed cut rates 50 basis points in September is that a lot of investors jumped in on the trade, wherein they believed that the Fed cutting cycle would pick up in earnest, would gain steam, and that's why the US dollar actually weakened quite a bit. And because of the dollar weakness, the peso strengthened up to that 55.50 level. But now that there's a normalizing that's going on, wherein you see US economic data come out and it's not as weak as maybe the Fed initially feared when they cut 50, some of the rate cut expectations are being dialed back a bit, in a sense that maybe they're not going to cut as fast, or maybe they're not going to cut as much.
Yeah.
Yeah, to the peso, consensus target is at 55.50. I checked at Bloomberg. Me personally, I think that's a bit too strong given what we've seen recently. So I would, if I were to cast, I think it's probably 57 to 58, within that range. That's where I'd get peso can end the year. Yeah.
Right. Yeah. It's not about our fundamentals. It's really about the strength of the US dollar, and that's a narrative for currencies across the globe. Okay, we've got about 1 minute left. Before I let you go, I wanted to ask you about Globe Telecom. It contributed to the decline of the index the most yesterday. Share price down 3.4%. What do you think this has to do with a change of the announcement of the forthcoming change of leadership at the telco giant?
Yeah. Me personally, I think it has everything to do with it. So aside from, I could say, maybe just the general market pullback yesterday, which a lot of stocks encountered, the movement in Globe was a little bit more than what you would anticipate on a normal down day. And the only real catalyst we saw yesterday was that change in leadership. Now, I think the market has had a very positive view of Ernest Wu during his time as CEO of Globe. He was able to take Globe to the level wherein it was able to compete quite well with the previous incumbent, which was PLDT. And of course, it was under his watch when GCash was launched, which, I mean, at least right now, I mean, including myself, a lot of people are looking at GCash very, very positively. So maybe the market, because the new CEO maybe is somebody that the market is not as familiar with, maybe that's why there's a little bit of discount that's being put into the stock. But at least the good thing there is that the change is not yet immediate or imminent. So at least based on the reporting, Mr. Cruz, the new CEO, will be under Mr. Koo as the deputy CEO until April of next year, when the actual formal turnover will take place.
Yeah, well, Ernest Koo did set the bar quite high, so this Carl Raymond Cruz is going to have big shoes to fill. Anyway, we'll be watching out for all of the developments on that front. Thank you so much for your time this morning, Serge Zandueta.
All right, thanks a lot, Maiki.
That was Serge Zandueta, Portfolio Manager at COL Investment Management. We're taking a quick break. Basis Points will be right back. Welcome back to Basis Points. Metro Pacific Investment Corporation and Keppel Infrastructure Trust are selling the largest imported oil storage facility in the country for $296 million to U.S.-based I-Squared Capital. MPIC, run by Manny Pangilinan, will get $148 million for its half of the Philippine Coastal Storage and Pipeline, while Keppel will receive the other half in a sale that's expected to be completed by early next year. MPIC's parent firm says that the move will help them cash in on the investment. I-Squared Capital has a global reach, managing $40 billion in assets across 71 countries. This development marks a big shift in the energy sector, potentially impacting oil storage, pricing, and future energy investments in the country. On another front, Philippine Airlines, owned by Lucio Tan, is the first Southeast Asian airline to secure a place in the brand new Terminal 1 at JFK International Airport. The terminal, which will start opening in phases in 2026, will become PAL's new hub for the U.S. East Coast, covering New York, New Jersey, and Connecticut. And until then, PAL will continue to operate from the current Terminal 1. Now, this puts PAL in a prime position in one of the world's most important air travel hubs. It's also seen to increase flight connections and business opportunities between the Philippines and the U.S. East Coast, boosting both tourism and trade. The new Terminal 1, which will span 2.6 million square feet, or approximately 241,000 square meters, is expected to be the crown jewel of the JFK Airport. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.